Wondering how capital gains work when you sell your home in Greenville? You're not alone. The rules sound complicated, but once you know the big levers, what counts as your primary residence, how your cost basis is calculated, and when exclusions apply, you can plan your sale with confidence. You're in the right place. I'm Brian Hurry, Realtor with Coldwell Banker Kane, right here in Greenville, South Carolina. And in the next few minutes, you'll learn a simple way to think about potential capital gains when you sell, plus a checklist to discuss with your CPA before you list. You will want to verify all specific details for your home sale with your CPA and tax advisor. Start with the question that matters most. Is this your primary residence or a property you've held as an investment? If it's your primary home and you've lived in it for 2 of the last 5 years, you may qualify for a federal home sale exclusion that can shelter a portion of your gain, often enough to keep a normal sale completely tax-free. If you're married and filing jointly, the exclusion is larger than if you file as a single seller. If you've been out of the home for a while, that 2 of 5 years use test usually focuses on the most recent 5-year window, so timing your move can matter. If you've used the home as a short-term rental or home office, that doesn't automatically disqualify you, but it's worth flagging it for your tax pro so they can separate personal use from any business deductions. Next, get clear on your cost basis, the number the IRS uses to measure your gain. You don't pay tax on the entire sale price. You pay on your profit after subtracting what you originally paid, plus certain settlement costs when you bought, plus qualifying capital improvements over the years. Think of things your tax advisor may tell you qualify, things like a new roof, HVAC replacement, major kitchen or bath remodels, windows, structural changes, and permitted additions. Work that adds value or extends useful life. Routine maintenance like paint, mulch, and minor repairs usually doesn't increase basis. If you can document the big stuff with invoices and permits, you give your CPA the tools to lower your taxable gain legally and cleanly. If you refinanced, the refi itself doesn't change basis, but some lender fees tied to the original purchase might have. If the property is a rental or second home, the conversation shifts. You won't get the primary residence exclusion, and if you've taken depreciation on a rental, you'll likely face depreciation recapture when you sell. That doesn't mean selling is a bad idea, it just means you should explore strategies before you list the home for sale. One path many Upstate owners consider for true investment property is a like-kind exchange under Section 1031, called a 1031 exchange for shorty. That's a way to defer taxes by rolling proceeds into another investment property, but it comes with strict rules on timelines, qualified intermediaries, and property identification windows. If you're even thinking about a 1031 exchange, involve your CPA and a qualified intermediary before you go under contract so you don't miss a deadline. A few timing nuances can help you plan. If you're close to meeting the 2-year use test on your Greenville home, waiting a bit longer to sell could unlock the exclusion. If your gain would exceed the exclusion, finishing a documented improvement that legitimately increases basis can help, but don't spend $1 unless your CPA thinks it protects more than $1 of tax. If you've moved out and turned the home into a rental, keep good records of the date you changed use. That line matters for depreciation and for how much of your ownership period counts toward the primary residence test. Keep state taxes in view too. South Carolina may treat a portion of long-term capital gains differently than short-term gains, and your overall state tax picture matters if you've owned property in more than one state. Your CPA can coordinate the federal and state pieces so you aren't surprised in April. Also, large one-time gains can affect things like estimated payments or safe harbor rules. A quick pre-listing chat can keep everything tidy. Here's a simple seller prep checklist you can start today. Gather your closing disclosure from when you bought, your major improvement receipts, roof, windows, kitchen, baths, addition. your property tax bills, and any records of rental use or depreciation if applicable. If you claimed a home office, pull those notes too. Then set a 15-minute call with your CPA to confirm your likely exclusion basis and any special considerations. With those answers in hand, you can choose your list date, price, and terms with a clear net number. If you want a straightforward local plan before you list, what to gather, what to ask your CPA, and how to time your sale, I'm here to help. I'm Brian Hurry with Coldwell Banker Kane here in Greenville, South Carolina. Call or text me and I'll walk you through your selling options and introduce you to trusted local pros so you feel confident from contract to closing. This video is educational, not tax or legal advice. Always confirm details with a licensed professional who knows your situation.